so much, Joe, and welcome everybody again to the panel. So I'm Cynthia, and I am your moderator for today. I am with the UNDP, and we have an initiative called the Youth CoLab, co-led by City Foundation and the United Nations Development Program in Asia Pacific. And today with me, I have the three amazing panelists joining me from all over the world. So may I please invite all of them to briefly introduce themselves, starting from Alex, Elizabeth, and Michael.
Hello, thank you, Joan. Thank you, Cynthia. So I'm Alex. I'm here on behalf of Bridge for Billions. It's a pleasure to be here today. We work with early stage entrepreneurs on incubation program and working with partners to create entrepreneurship opportunities for these founders. I'm very excited for the meeting today.
Thank you, Alex. Elizabeth?
Hi, everyone. Thanks for having me here today. I'm the venture partner for impact and sustainability at Quest Ventures, which is a Singapore-based leading early-stage venture fund. I've also been an entrepreneur in fashion and retail for the last decade of my life. I also am the founder of Sect to Sky, which is a nonprofit that brings low-cost, high-impact eye care to the world's most underserved communities like the Himalayas.
Wow, incredible. Thank you so much for joining us, Elizabeth. And Michael.
Hi, thank you, Cynthia. I'm Michael Au, Managing Director of District Capital. We're a carve-out of a single-family office here based in Hong Kong, and we focus on impact and environmental and social impact investment strategies, which we deploy across asset classes. Nice to be here.
Brilliant. Thank you so much, Michael, and the panelists for joining us today. So tell us a bit more about how your work has helped to define and measure the Sustainable Development Goals, or even the SDGs, as we call it. So how would you mention it in your sector, in your field, in your work? What does impact mean to you? Starting from, let's reverse it. Let's go Michael, Elizabeth, and Alex.
Sure. So we've started tracking across the SDGs quite early on. It was a framework we identified as something that would be useful in reporting to our principals as a way to track our progress and our development as an individual fund. Recently, we've also adopted the methodologies of the Impact Management Project so that we can have a kind of a high-level numbers, apples to apples way of comparing, but then also have a qualitative way of discussing projects and where we want our entrepreneurs to steer their work in the future.
Cool, thank you. And Elizabeth?
Okay, so we as a fund, we measure impact on different levels, primarily because we're in the early stage, so we actually have our own proprietary way of measuring. From deal origination to exit, from deal origination, we actually screen out companies that actually have a genuine intent to drive impact and be profitable. And we often ask if companies are taking a serious, customer-centric approach in the middle or low-income segment that they're looking at and try to deliver value in these markets. That for us is creating impact. But we also look at responsible exits. So we have a responsible exit framework because as investors, we always want to ask if, when we find a buyer for this company, whether it is right for that segment that they're serving. We also look at sector-specific metrics in the 5 core themes we invest in. So in financial services, healthcare, education, and sustainable living and food security. With that, we actually have a weighted score and a framework to measure how much impact we generate with the dollar invested. So it's quite a mix of different international benchmarks, but primarily because we do early stage investing, we found that it was very important to kind of take the best practices and work with these early stage startups as well, whom are often still pivoting in their business models to implement these impact measurements.
Incredible. Yeah, we would love to learn a bit more from you too. We also work with young founders across the region a bit more in the earlier stage as well. So definitely have a lot to learn from your approach. And Alex?
Yes, sure. I love this notion also of net impact. I think this is one of the trends that eventually all capitalists will follow. So that's so super exciting to hear too. So we are a mission-driven organization ourselves, and we work with incubation mostly with entrepreneurs that go from post-ideation to pre-acceleration, so early stage. And so, of course, our impact is our startup's impact too. And we do it not only by understanding the outputs of this program and these initiatives, like the number of entrepreneurs, the diversity of these entrepreneurs, how many female founders, how many founders from minority groups, how many founders who have never found previous support in other programs, etc., but also the results in the ecosystem. So more focused, also following the theory of change methodologies, focused on what was the changes, the results that we've seen in all stakeholders. So in entrepreneurs, have this business survived through 2 years? Have they generated economic development in their communities? Have they generated employment, etc.? So also looking at these SDGs that we work as Bridge for Billions. And also in the mentors, have the mentors developed new skills, new behaviors? Have they changed the way they look at their own projects and their companies where they work with? Have we involved more partners in the ecosystem? So this is the kind of different dimensions that we analyze when we look to impact too.
Incredible. I love it. I love how you also pick up on the mentor side and actually like a stakeholder side, like have people interacted with you and your organization be impacted too in terms of being a mentor or even working as an expertise or even advisory. So I think for the UNDP, we also think like have our other UNDP colleagues been impacted while being impacted while we're driving impacts through the startups that we work with. So I think there are a lot of misconceptions with impact investments all across investments, across operations, and even across the business models as well. So I think, what are some of your thoughts on that? What are some of the biggest misconceptions you have faced to date? So maybe we'll go with the same order as the last question. So just to keep things simple, Michael, Elizabeth, and Alex.
I think something that, kind of even within our family when we were on this journey to define our impact and make values-aligned investments was actually finding a definition of impact investing that we can all kind of stand behind. I think that that's something that we still see when we're out, not only providing capital, not only when we're getting pitched, but when we're talking to other asset owners and allocators, there's a lot of expectations. There's different kinds of ways of people defining the word, and so there's a lot of miscommunication and misrepresentation, and therefore leads to a lot of miscommunications. I think that that's one of the things that I would be wary about when I'm discussing impact with someone that I just met, is I really try to listen, I really try to probe and understand what their definition of impact is and how we can work together in ways that will not lead to more miscommunications.
Brilliant. Thank you, Michael. Yes, I think I have started conversations with people and then understanding, okay, maybe your impact is kind of different from what I was intending to, but thank you. And then we can try and find a middle ground somewhere that we can go from there. And Elizabeth?
Yeah, I have 2 points. I think one of the biggest misconceptions I often face is that impact investing is always called patient capital. And while patient capital is a type of impact investing, it's more on the venture philanthropic side, it is a term that has somehow encompassed all of impact investing. So to me, it's actually urgent capital and not patient capital because, for me, I think today, the data and research has shown how relatively well ESG and impact funds have performed, and in fact outperformed like a lot of normal funds because they're risk adjusted and the companies are way more resilient. So, as we move forward, like even with, pandemic, post-COVID, like stakeholders, are calling for change. And it's just surprising to me that a lot of people still don't recognize that Asia still contributes to many of these problems at the end of the day. Like 82% of plastic waste in ocean comes from Asia. We still generate 50% of global emissions. So for me, it's like quite surprising that and a myth that capital isn't invested more into impact in Asia and finding solutions. Not to mention this large growth opportunity we have here to scale profitable impact. The second myth is that I really think this idea of profit with purpose is quite confusing with the idea of it being no trade-offs between financial and social returns. Essentially, it's saying like profit with purpose is being the same reward, same risk as a no trade-off risk investing. So for me, impact investing is a completely different asset class. It provides better returns and actually has lower risk because it factors in all the ESG, right? And so essentially what we have is we're building companies, or we aim to build companies that are more resilient, that bring better value to consumers in Asia. And essentially, as we build better companies, it's just a better way to invest. So for me, like profit with purpose is different from a no trade-off idea of what impact investing is. So yeah.
Thank you so much, Elizabeth. That actually has cleared up a bit of my brain a bit more too. I think like having them is totally different rather than them and trying to tweak it so that it sounds like the other thing that is existing previously. So thank you so much. And Alex?
So to pick up a little bit also on Elizabeth and Michael's comment, totally. I mean, at Bridge for Billions, our center stone is always about accessibility. So thinking that this network is not democratic at all, and even if we're working for socioeconomic development, is non-inclusive. So where you're born, the network that you are born with, the region, your accessibility determines how you're able to achieve to take advantage of these opportunities out there. And then that it's usually a lot focused still in main sectors within impact. And now with everything that's going on, we're witnessing sectors like that were not privileged at all, and that would mean that governments are fighting to understand how to deal with tourism, culture, well-being, even health, education. So all of these that are purely impact-based value propositions and that have not been raising attention so far. And to think that if we say that 80% or more of startups end up failing because they did not find the right support or in terms of validation, etc., well, a social entrepreneur has even higher or a harder time to prove it because it's a new solution, an emerging problem with no competition, or still validating to capital that this can be an adequate solution. So the growth can be slower, even though then we can prove that returns can be higher, that consumers will be happier, etc. So I think there's a lot of misconceptions still, but it is true that in the past years, the network completely shifted and we're witnessing a lot more education and information, and founders and talents are looking for this ecosystem. So this is something that I think will change the ecosystem for sure.
Brilliant. Thank you, Alex. And tell us a bit more about how Bridge for Billions has helped to also break that misconception and also to help young founders and social entrepreneurs through mentorship and through corporate innovations in helping them to achieve the SDGs and impact.
Thank you. Yes. So it's a little bit also going back to what I've just said, right? So our main objective is thinking that we need a solution that makes entrepreneurship resources more accessible to all founders. So we have an online digital program, and we work with organizations to either digitalize their entrepreneurship program, so understand how can we maximize their impact and achieve and work with more entrepreneurs, or by having our own incubation program that is open to all sectors, so not only some privileged sectors, and to all founders. Of course, then we assess motivation, etc. But our main key is that we know that if an entrepreneur can access a mentor that will challenge the venture, that will, as Michael was saying at the beginning, that will give knowledge, that will share a bit of the knowledge, and that will help in this validation process, their odds and possibility of succeeding is much higher and is maximized. And this is where we want to work. So to understand how we can actually work with this trend that we have been seeing in the past months with all the situation that is going on how can sectors and different ecosystems collaborate together. This is something that is very important to us because there's a lot of competition also, which is normal in our sector, also in this emerging sector, but understanding how can corporations work with foundations, with governments, and there are very interesting impact mechanisms also around to foster this, like impact bonds, etc. And our goal as Bridge for Billions, and as someone who is able to bridge this innovation gaps, is to be a catalyst. So how can we give this support and robust methodology of entrepreneurship and have the different players work together to extend resources to other founders and to other solutions that are not in the privileged circles of investment at the moment.
Brilliant. And just a quick follow-up. I understand mentorship is such a key component in a lot of your core programs. Tell us a bit more about your tips in how can we match mentors and mentees maybe at scale and also effectively.
So in our incubation program, for example, it's designed so that an entrepreneur has to have a mentor. And the way we do it, well, we have open calls for mentors. We work with with volunteer professionals who want to give their time. They give 1 hour of their time to work with these entrepreneurs. And the matching process is that they choose each other, because we think that people should be able to understand who they're actually looking forward to work with, who they are able to support, who they have empathy with, because mentorship, it's also a lonely road, and we know this, and they have to feel confident to be able to work together. But we designed this program so that mentors feel empowered to do so. So if you're a business professional and you want to either spot early innovation, to understand what's the creativity of founders everywhere, even in a different community than yours, and how they're addressing problems and creating solutions. So thinking about this large-scale capacity, an online program, for example, allows you to do that, or a program that has an online leg somewhere, and there are many programs like that now. The way we do it is that mentors choose and see the available projects. They choose those they are interested in collaborating with, and then there's this marketplace match where they choose to work with each other, and this is how we do matching.
Perfect. I think we have a lot to learn from you. We do have a lot of mentors and we do have a lot of mentees, but I think the matching is the magic. So yeah, happy to learn more on and offline as well. Thank you so much, Alex. And then moving on to, how about Michael? So at District Capital, some of the key and leveraging industry for the next decade for change, what would it be? Like, what was your vision for District Capital, and what are some of the game-changing industries soon?
Right. So because we look across asset classes, I think our strategy and our leans in the public markets is quite different than our earlier stage investments where we do see deeper impact. I think it's a balance between kind of our resources, our additionality, and our domain experience. We've identified 3 kind of main areas where we really want to see a change, and we actually have the appropriate advisors and experts within our immediate network to actually help make the difference for the founders and for the industry. Are kind of using leveraging biotech and health tech to increase the likelihood of affordable healthcare. That's something that is quite important to us. We have a lot of medical doctors and clinical researchers in our family. That's something that we could look deeply into. The future of food security in terms of how we produce food and the relationship with climate. That's something that we work with quite a lot with founders. And actually, the using fintech as a tool for the future of sustainable investing is something that we're very passionate about here. I think, as some of my panelists had already alluded to, we feel like this is just the future of investing is what we're doing right now. There's no way to divorce the risk, return, and impact of any investing. So we should get the market more up to speed to that. And that's the three main categories that we're most passionate about.
Brilliant. And throughout these three categories, what are some of your thoughts in when you're recruiting startups or teams? What are your methodologies in researching on them? So do you go through by market and then you look at some of the leaders and then you see what are some of the competitors, or what are some of the strategies in scouting pipeline for these three categories?
I think a lot of them do come from recommendations of other founders, from industry experts who we already have a close relationship with. As you already said, the universe is quite big. There's no way that we can actually touch and understand the businesses of every single one of them. We will try our best where we can identify founders where we can make an immediate impact for them in terms of opening new doors, opening new capital, and that those then generally come from kind of social circles that are a couple of steps removed from us, but not too far removed. So we don't do a very typical VC way of scouting where we cast the net extremely wide and look, but we actually look deeper into seeing how we can work with these teams to make a difference.
Well, thank you so much, Michael and Elizabeth. So at Quest Ventures, you guys launched the Sustainable Impact Fund. Tell us a bit more about the rationale behind it. What are some of the vision that you guys had when you started it?
Yeah, sure. I think this starts a bit with my own experience as well. I think after a decade of being an entrepreneur in retail and also being a social worker, I really wanted to find a meaningful way to bring my experience and my passion together. And I really felt this passion to enable entrepreneurs and kind of give them that platform that I didn't have when I was starting out, as an entrepreneur. So, the other thing is that, I saw this huge opportunity to bring positive impact in the early stage impact investing space, primarily because I realized it was quite underfunded and there were just a handful of players in the early stage space. Also because the scale of the problems that we're looking at in Asia are so huge, whether it's access to healthcare or education or climate change. These are such big problems, but also with big problems comes opportunities. So, I became very intrigued with this idea of an impact investing fund. So last year when I approached Quest, Quest has had a very strong track record already of investing in early stage companies in names that we know now, like Carousel, 99Co. These were like the first wave of Singapore startups that have gone on to do very, very well. And it's really in their DNA to do early stage investing. So when I approached them with the idea of starting like an impact investing fund, we really sat down to think, what would impact look like for us? What does early stage impact investment look like? What are the risks, right? And really the idea at the end of the day is to bring a venture mindset to purpose-driven companies. The other thing is it's a double-pronged approach. It's not just bringing capital, but also capital and expertise, but also building ecosystems. And so a lot of the startups that I look at in countries in emerging Asia, could be like Myanmar or even say Bangladesh or Vietnam, these places, they have a huge need and demand for such startups, impact startups and services and products, but the ecosystem can't support them. So I think it's also the idea to not just support with capital and expertise, but also to help build ecosystems. And that made it a very natural alignment between Quest and made it the best partner for this fund. Ultimately, our vision is, really to invest in these early stage companies in emerging Asia, which we see as Southeast Asia and its frontier markets like Myanmar and Bangladesh, to really back founders and innovative solutions to solve these kind of systemic problems in a profitable, scalable, and sustainable way. And we really want to bring positive growth to these emerging economies and back these passion, purpose-driven founders as well.
Very awesome. And yeah, I think Quest is a very, very renowned brand of having an extremely strong portfolio. So at the UNDP, we have always been thinking, okay, there's investing in social entrepreneurs or for-profit enterprises, but we also have the mindset of mainstreaming the SDGs to the tech world. So what's your thought in so it's more like you do have a cohort of incredibly strong entrepreneurs in the portfolio. What are your thoughts in also mainstreaming the impact of the impact mindset, or even just help aligning some of the metrics that they're looking at? Because I think if you're running integral business, then I think you're contributing some parts of the SDGs is quite broad. So definitely if you're in a legal business and you're treating your stakeholders well, then you're definitely contributing to number 1 and number 8, which is the no poverty and providing economic job for people. So yeah, so what are some of your thoughts in that?
I mean, definitely, like with the kind of alumni of founders that we have, there's 2 things we do with them. One is definitely try to engage them in terms of looking at not like an ESG, at least in their frameworks, because these belong to an earlier stage fund. And as they scaled, it becomes much more difficult at a later stage to think about impact measurement. But we want to do it step by step. So we start with at least ESG, getting them onboarded with that, understanding environmental risks, social risks, and diversity and governance. That as the most basic for all our companies. And then, with the new companies that we invest in, then definitely we start looking at impact measurement, or even how impact is woven into their business model altogether. We try not to separate the 2. That's one thing. On the second level is also to get it these earlier founders that we've invested in to pay it forward. So, part of impact investing is also, like I said, building the ecosystem. It's creating the knowledge exchange, the kind of ecosystem, the kind of dynamism that venture, that traditional venture industry has had. And we want to bring that into the impact world as well, into social entrepreneurs as well. So there's a pay it forward mentality. We have them as mentors. There's a lot of cross exchange. We have Quest for Growth programs where we actually get our founders to, speak, sometimes they mentor as well. So it's a very tight-knit family, and we operate very much on Asian values, where it's kind of all a family.
Very awesome. I think that's the key part. So if we're all family, that just not applies to Quest, but actually to quite a bit of the world, that if we actually treat other people as a family, then there wouldn't need to be a term of social business at all, because every business should have been treating everybody with dignity. So I think that moving forward, asking all of you, if you were to invest and find eligible founders who have great potential in making an impact and also running a business, what are some of the key signs that you look for as impact investors? So starting with Alex, Elizabeth, and Michael with alphabetical order.
So not so much thinking only on impact investment, because I would leave that for maybe Michael and Elizabeth more, but thinking about the incubation and thinking with this vision that we have, that we really want to not exclude a founder if he has the potential for it. I think that mostly, when it's on 2 levels, when assessing for joining a program and the support that we're able to give, we're mostly understanding what's the motivation and what's the stage, if they can really benefit from what we are able to give, right? And about motivation, when I mean motivation is not only if it's a priority, etc., but also how purpose-driven is this founder. So we don't exclude the program to purely impact-driven value propositions in terms of the classic impact that we already talked about a little bit in the beginning, but if it's purpose-driven innovation. Is the values of this founder aligned with the purpose of the solution that is developing for this program? Is it really a meaningful problem? How is he addressing this problem? And is it focused more on the monetary compensation or solving a problem and having a solution for this problem? So how resilient it is, how passionate it is. We don't know yet the capacity to adapt, but this is how we're going to understand and try to anticipate, is this person going to be resilient enough for what this ecosystem needs, etc. And then in terms of advices of things that we try to embed in our program and in the mentors that we select to support these founders is exactly in the same way. So networking, talk to your customers. Don't be so passionate enough that you forget to think about your users that will benefit from your solution. Understand if the values that and the culture that you're building around your organization translate the way you relate to the exterior. So all these key values that we know that a social entrepreneur will need to succeed.
Amazing. Thank you so much, Alex and Elizabeth.
Yeah. I mean, we, definitely look for, as I said earlier, look for companies that have, where impact is already strongly woven into the business model. So as they scale, there is no trade-off between impact and growth. In a sense, we always ask, if we remove this impact from the business model, would there be significant value taken away? And if it's an yes, then impact is woven into the business model. So I think that's a very important factor that we look out for. Beyond that, it's also like the founders. So their commitment to impact, their commitment to other values also aligned with the vision of the business. But also more importantly, we look for ambitious founders. Because like going for a double bottom line impact and financial return is a tough journey, and we want our founders to be ambitious and to also be realistic, that they not just have to be strong and shrewd business people, but also to have the right values. So backing the right founder is very important in the early stage as well. So it's mainly these two very big signs to us that what we think is a good investment or not on the high level. Yeah.
Thank you, Elizabeth. And Michael?
Yeah, I think that all three of us speak from a place where we've seen a lot of founders, and this could be a half hour or to a 2-day conversation. But to summarize it, I really do think that a couple of words that that I've written down in bold and that I picked up through Alex and Elizabeth's sharing was resilience, integrity, and purpose. Because at the end of the day, as a founder, you're driven to find a solution for a problem that exists with no existing solution. So getting there, you got to pull all the stops. You got to do everything you can to get there, especially if it's in the impact space, where if you fail, then that solution could go to waste, or that solution might never see the impact that it should be giving to people. We actually go a slightly route that might work against us. We actually don't look just for impact labeled entrepreneurs. We look for good quality entrepreneurs, and sometimes we have to educate them on the impact side. We have to encourage and advocate for the impact side, for them to think in that way, for them to build it into the business model. I think something that Elizabeth mentioned previously, responsible exits are something that's very important to us, because we are dealing in categories where if that technology falls into, say, not a mission-aligned ultimate buyer, it could be quite detrimental to all the work that we've done with the entrepreneur and investing in the solution. So, a million thoughts on this, but I tried my best to distill it down into a minute answer.
Thank you so much, Michael. So I think it is time for a wrap up. So I think the last round would be, tell us the one tip that entrepreneurs can take away. So if they forget everything else, one tip, maybe it's like keep going, never give up, or be resilient. I think we do have a lot of nuggets, golden nuggets around. But one tip, and also what are some of the ways that they can get in touch with you? So starting with the same order as previously. Alex?
Look for the right partners. Not any partner, but look for the right partner to avoid these mistakes or being too early or unprepared. And if you want to contact me or to reach out, you can do it via LinkedIn. Alexandra Martins from Bridge for Billions. If you look for Bridge for Billions, you will find me. and I'm happy to discuss anything or to give more information on what we do.
Amazing. Thank you so much. Alex, Elizabeth?
Yeah, mine would be to say, like, really know your outcome, understand, like, what is your goal, and be very, very clear about it, distill it to 1 or 2 simple statements, and, you know, just have single pointed focus towards it. Yeah, I think, yeah, same. If you want to reach out, my LinkedIn is Elizabeth Tan on Quest Ventures. You'll also find me there.
Amazing. Thank you, Elizabeth. And Michael?
I'm actually going to plagiarize a little bit and expand on Alex's point. As an investor, especially on the early stage side, and even as a fund with my fund managers, is actually choose your partners very well across all your stakeholders, not just the people you work with every day, but you know your investors, your downstream clients. They all affect your decision making on a daily basis. So keep everyone in mind when you're developing your venture. And if you want to reach out to me, the website is www.districtcapital.co. You can find my contact on there. Thank you.
Amazing. Thank you so much, Michael. And my final tip to everybody is you have to be proactive. And to do that, you have to go find all of the panelists and also enjoy the rest of the summit. So thank you so much to our lovely panelists for your time and also your expertise for sharing the myths and truths of impact investments. And hope everyone would have a great time at the summit, and see you all. So do we do it? Like fake Q&A, because like in other panels we have also been trying to do like Q&A with like fake real audiences. So.
That's interesting.
Yeah.
Many new concepts appearing around.
Thank you very much all.
Thank you all.
Really, no, really, I really think that is an amazing panel. So far we got. It's very interesting to listen to all of your thought. And yes, next, what next? Of course, not to mention. You keep saying how to reach you guys out. Please, you guys keep in touch. I think there could be like some more potential things that you guys can talk to and work with, because definitely seeing from very early, from even just incubator, family office, as well as VC, and we also have one that who knows about SDG here. Please feel free to talk to each other, and that's my key. I think because putting up this panel is not only for the audience. I really hope you guys enjoyed it and showcase your work that you have been doing amazingly. Yeah, that's it really. And in terms of a debrief, again, marketing material will be sent to you. So for your community to share, and as well as some free premium ticket to your community. And number 2 is that we will send you login for those that who come back on the day. I will reveal the actual agenda and the time, and even like the agenda for the whole day. Not to also to mention, because we are very grateful to have UNDP collab with more onto the Startup Impact Summit. We also have pitching stage. Feel free to come join us. This is pretty interesting. We have like different agnostic company over there, and as well as other SDG workshop panels. Yeah, it's good. Any further feedback and how we can do better?
Will there be kind of UNDP like tilted pitching sessions, or is it all agnostic?
I will let Cynthia to explain.
Yeah, so it's actually, we have 19 different startups pitching. So actually we have, it's all across the region and all across different industries, and it's all across different stages as well. So, so we have roughly segregated them into 2 parts, purely because having one 20-minute pitch, 20 startup pitch is just not possible. So I think half of it is more focused on digital platform and digital solution, purely platform. And then so the other one have actually a IoT or a physical component to it. So these are like the two separate ones as well. So I think having seen the pitching, so I think the ones which have the hardware component to it or the physical component to it is a bit more mature than the teams with more on the digital side. But they're both working on very, very diverse ranges of issues as well as solutions and opportunities, I guess. Yeah, so please join us.
Thank you.
I will. Thank you.
Looking forward. Yes, I will too.
Yay!
I'd love to connect with you guys as well, Alex and Michael, to learn more about what you guys do. This was too short.
That's true.
Yeah, I want to keep going, although my time is ticking. I really want to listen more and more and more.
And Joe is like typing. It's like, yeah, 5 minutes left. 5, 3 minutes. Time to wrap up. And I'm like, okay.
Yeah, save some time on the Q&A section. Hopefully we got some interesting one, and so you can enjoy a bit. And please come to our speaking launch as well to meet some other impact investor as well as some of the amazing entrepreneur, I would say. Great. Any more questions? Sorry? No. Thank you very much for your time. You guys have been really amazing and have been, it's really good for this.
Thanks for having us.
Very much.
Thank you.
Very enjoyable. Thank you.
Thank
everyone.
you.
Bye.
Selfie.